Good morning, everyone. Welcome to the Trading Market Technicals morning call video for Wednesday, April 17th. Well, we did get that retracement rally that we were expecting. Dow up 157, S&P up 22, dollar down 50 cents, gold up 28 on that also oversold bounce, and NASDAQ up 47. And we were looking for about a retracement of half of the red engulfing candle that happened on Monday. We had with the gap up probably 2/3 of that candle. Choppy price action yesterday. Markets gapped up and just grinded higher pretty much most of the day. Wasn't expecting a 153 gain on the Dow, but nonetheless, like I said, this market is a little bit unpredictable, and we really need to be on our toes. As we can see, we're getting volatility back into the market, and once this bulls and bears start fighting it out, and we can start breaking some pivotal lows, and I think we will get that. We will get that correction. Now, we are in options expiration week. So what does that tell you? Generally, there's a bullish bias to the week. And as I mentioned on yesterday's call, we have bulls and bears fighting out. A lot of bigger firms putting out, writing calls and puts, hoping to expire worthless. And they will defend that position. So I don't generally see much happening Wednesday, Thursday, and Friday. Now, that doesn't mean that something coming out of Europe, which happened this morning. Actually, we had some bad news come out of Europe, and the minis are down 7 handles right now. Not that big of a deal, but if they start building on it, we could be down 10, 12, 13 handles again, and then really start the day off on a negative again. But I do generally see probably Thursday, Friday, quiet to slightly up and or slightly down, where we are within this big red engulfing candle that you would see right up in here. So I think we'll probably end up staying in this range, if not the upper end or the lower end of the range, until Friday. And then we would really reevaluate next week. And next week really is going to be key what type of theme we're going to get here. Are we going to continue this uptrend, or are we going to break these pivotal areas of support that we're watching and then start moving lower and really get that correction that everybody's anticipating? That is to be seen. We don't know yet. Charts really don't say anything much here other than we did do some technical damage, but overall the trend still remains up. I would not be surprised, and nothing surprises me anymore in this market, guys. I would not be surprised if we run higher into this channel. So I'm taking it nice and safe. Like I said, couple of trades during the day. If they don't work out, take a step back. When you have days like Monday, when money's easy to be made, and yesterday money, trades are really a little difficult because it's getting pulled one way or the other. So you take a few trades, you take a few stops, you take a step back. No big deal. You had a big day on Monday. Just giving you a little bit of an example of how a professional trader would be thinking. So take a step back. If it's getting a little hard, you don't need to keep trading and try to make it back. You know what? I don't have it today. Market isn't giving it to me. Let me take a step back, and we could always reevaluate for tomorrow. And that's what I'd like to do. Just giving you a quick example of little head conversation that I usually have, and probably most of the professional traders do as well. Okay, so let's run right into the charts. I did mention yesterday, I showed you how a lot of the precious metals got really taken a beating, have gotten taken a beating. Most of them have recovered, half to 2/3. So I'm not going to show them to you again. Just letting you know that even though they recovered off of Monday, but they're still in downtrends. And also, I mentioned China; they're still in downtrends as well. They did have a nice bounce, but I'm not going to get that into. I want to get right into the charts now. S&P daily. We are still within the inside day of this of Monday's big sell-off that we had. Okay, now if you had, look what happens here. Big sell-off, 4 or 5 day rally, gap up, and we rally for another 5 or 6 days. Same thing here. Same thing here. We had a little bit of a sell-off, 2 or 3 days. Here, 1 day, 2 day, back up, another 2 day, 1 day sell-off, and we roll back up again. And we have little engulfing, little spinning tops all the way up. 1 day sell-off, back up again, 5 days up. So this is a repetitive pattern to me, so I'm looking at it. Does not surprise me to see if this market takes out the high of Monday and then start to rally again. As you can see, that's what's been happening all the way back from the beginning of November, 2012. So just keep in mind, take a look for repetitive patterns here when you're looking on a daily chart. This is going to be the pivotal low, 154. As you can see, it coincides nicely with the 50-day moving average and the lower trend line of this uptrend channel. All right, so let's keep an eye on that. Now, just a quick look at the 60-minute. As you can see here, we did gap up from the low over $1 in the spiders, and then we just kind of rallied. Slow grind up into the close. We had 1 hour of a lower high that put a sell signal in the market in the afternoon, but that was quickly negated in the next hour, and then the markets kind of rallied and squeezed into the close. Shorts covered. Okay, so this is why I say don't get too emotional when you're trading, and look to put on shorts when you have a big down day like 258 points on Monday. If you were looking to establish new positions, you would wait for some sort of a bounce, and obviously this would be one of the bounces. If it wasn't options expiration, I would be more inclined to put out some shorts, but not yet. And why? Well, I did a fib number from the top here to the low from 4.5, and that comes out to a 61.8% retracement. So these are ideal areas to short. 61.8, 76.4, right up in these areas here are ideal areas to short. Now, I'm not looking to get short. If you were looking to get short, you would maybe put out a quarter position short, another quarter position, another quarter, and kind of leg into the trade where your stop's obviously above the high. But I'm not advocating that, and I'm not looking to do that right now because of options expiration. Generally, like I said, there's a little bit of a bullish bias. But again, this is a good area to look to establish some shorts, and if not for the day, possibly for the day. Let's see what happens when we get to the opening. Do we recover that down 7 handles right now in the minis while I'm recording this? We don't know, so we'll take it one step at a time. Maybe they recovered it down 2, down 3, and then we're back up into this price area, and then they fail. Then I would look to put an objective short on here, and obviously your stops would be above 157.50. Give it 20 cents above that, 15 cents above that, depending on your risk parameters. Okay, but we are at this area, first area, to start thinking about looking to get short, at least for the day. But we need failure, and we need price to roll over. Okay, we don't just go out and blindly short the market. We need the price to stop, pause, and fail. All right, and if we stop, pause, and fail, and take out 157, then I'd be a little bit more aggressive for the day. That's my scenario for the day only, not for swing trading. Okay, and here's the 30-minute chart. Just letting you know, you can see here we gapped up from this low, gapped up over $1 into main pivot. We held for the morning session. We popped up around lunch. We that 1 hour that we had, that 1.5 hours that we had, we rolled over and of course squeezed into the close. Okay. Take a look at the IWMs. Same thing. Now with the gap up, now this is a small candle, no question. But with the gap up from the low, actually put it at almost 2/3 of the candle. We want to see half a candle if you're looking to, look to start establishing short positions. Now, I don't know if this is the top. I really don't know. It sure looks that way. But again, looks could be deceiving, and one day doesn't make a trend. So even if we pop up today, or what I'd like to see is really take out yesterday's low and then ultimately take out Monday's low and start really taking this pivotal low out here. And this is what I'll be watching for the Russell. There's no question that the Russell, out of the 5 indexes that we follow, are the weakest. Is the weakest sector out of the 5. So there's no question. If the markets do roll over and you want to take a market short, I would look for the Russell to look for an intraday short. We tried that yesterday. We were looking for shorts in Russell. Didn't work out. We rolled over, and the markets just kind of played dead to the downside, and then started getting some buyers to come in. And again, buyers of dips are well in force here. You can see it, even though we had that one down day. But buyers of dips are still out here. Here's the transports, 2/3 of the candles you can see here. So we're going to need to see this long-term uptrend line is in red is going to need to hold and then really start to roll over. So we're going to need to see price really start to roll over again. Now, we could get an up day in the S&P and the Dow like we've had been, and then Russell and transports again roll over. That would be ideal because now you have market divergence, and then eventually the Dow and S&P should play catch up to the 2 leaders and again roll over. So we'll see. We'll see. But again, guys, this options expiration, so really use a lot of caution here. All right, XLF, the financials. Goldman came out with some earnings and ended up in the beginning and then rolled over and really took a real tumble. So watch the banks. I think the banks are going to be another tell sign here of what is to come. And the 50-day moving average and this big bearish rising wedge that we're in, this lower trend line needs to break and close, and then we need to see price start to roll over again. But we're coming really getting real tight into this apex here, as you can see. So there's not much room left. So it's going to do one of the two things. Either this is going to be a failed bearish rising wedge and break higher, or this is going to roll and start to break lower again. So only time will tell. But right now we're still within this range, and we're still range bound here. So let's just let's take it one step at a time. But again, keep an eye on these sectors intraday for some ideas and some clues as to where this market may be heading. Here's the diamonds again. Well bid up, I have to tell you. I'm staying away for trading Dow. It's just it's no matter what you do, whether it be down or up, the market continues to be bid up in this sector. So the Dow, the brick and mortar Dow Jones, Dow 30, people are still flocking to the Dow. So if I'm looking for a short, it'll probably be the Russell myself. And here's Apple. Apple had a decent day, up $4. Really, for Apple, it really isn't that much. It's still interesting to see a pin of 400. Now, yeah, obviously there's only 3 trading days left, so apparently I don't think it's going to happen. But the numbers, when you calculate the numbers, it did look like a 400 pin. But again, we'll see what happens. I'm not trading on that, but we do have that head and shoulders again, right? We have a little head, left shoulder, right shoulder, and the neckline coming in at 419 for. I think it's 419 would be 419, 420 would be the neckline. A break below that and close, you're going to get a quick flush. You may not get to 400, but maybe 410, 412. But keep an eye on this. This is looking interesting as the days go on. We really can't rally here. As you can see, we had an inside day from Monday. We did take back a little bit of price action again, but only time will tell to see if Apple breaks. I think it goes lower. Just my opinion, really means nothing in trading. But the way the charts look, the way Apple can't rally, I think Apple does go lower. Okay, and I would just treat that as a day trading stock. And SMHs, same thing, guys. As you can see here, we actually took out the previous close, and so SMHs were strong yesterday. The semiconductor. So good sign for the bulls. Good sign for the bulls if you're looking for continued rally. And here's the Qs. Lastly is the Qs. Again, taking back 2/3 of that candle. That's including obviously the gap up, as you can see. But again, constructive yesterday. Big day for the bulls. I don't think the bulls are out of the woods yet. I do think partly in due for an oversold bounce. Not that deep of a bounce that was looking for. But again, nonetheless, was a big bounce for the bulls. And I do think this market's going to get tossed around. We're going to get some choppy price action in the next 3 days. So again, use caution. 2-3 trades. You got some good money. You know what? Take a step back and watch the price action and get your day ready for the next day, because I do think that we're going to have some choppy price action in the next 3 days. And if you have some money that you made on Monday and Tuesday, you know what? Take a step back, go slow, and reevaluate the situation here. Again, because everybody, a lot of these bigger firms will be fighting to keep their position, to defend their position on their puts and calls that they're writing, okay? All right, guys, that's really about it. Let's see what happens today. We're down 7 in the minis. Let's see if that holds, and let's see the sellers step back in today. Be really interesting to see what happens today. Watch the lows from yesterday's lows on a lot of these sectors, all right? That's going to be a good sign to say, if we start breaking down, then we can start looking for some shorts during the intraday trade. Take care, guys. Have a great day, everybody.